Hello and welcome. Today, we're diving into a true classic of investment literature, Peter Lynch's One Up on Wall Street. This book isn't just a guide, it's a revelation for anyone looking to take control of their financial future, especially if you're just starting out. Peter Lynch is a legend. He managed the Fidelity Magellan Fund and achieved incredible returns for over a decade. But his most powerful message is simple. The average investor, you and me, actually has an edge over the Wall Street professionals. Lynch argues that our everyday lives expose us to potential investment opportunities long before the analysts on Wall Street catch on. Think about it. You see new products, visit successful stores, or notice growing trends in your daily routine. These observations can be the starting point for finding great companies. You don't need complex financial models to spot a business that's doing well and gaining popularity. Your own experience is a valuable research tool. Remember, if you like the sound of this book and want a free copy, use the link in the description to get it for free with Audible. Where do you find these opportunities? Everywhere. It could be the crowded restaurant chain everyone's talking about, the innovative gadget your friends are buying, or the service company that's always busy. Lynch encourages you to pay attention to the companies you interact with and the products you use. If you like a product or service, chances are others do too. This is grassroots research, and it's incredibly effective. Lynch breaks stocks down into 6 categories. While he discusses slow growers, cyclicals, asset plays, and turnarounds, he spends significant time on 2 types particularly relevant for individual investors seeking growth. Fast growers are small, aggressive companies with annual earnings growth of 20 to 25% a year. These are the potential 10-baggers, stocks that increase tenfold in value. Finding them early is key. Stalwarts are large companies that grow at a slower pace, perhaps 10 to 12% a year. They offer protection during recessions and can provide decent returns. Think of them as solid anchors for your portfolio. Lynch popularized the term 10-bagger. It refers to an investment that returns 10 times its initial cost. Finding just a few 10-baggers over your investing lifetime can dramatically boost your overall returns. These aren't found by following fads or hot tips. They are discovered through careful research into companies you understand, often those you've identified through your everyday observations. Spotting a promising company is just the first step. Lynch stresses the importance of doing your homework before investing a dime. This means understanding the company's business model. How does the company make money? What are its products or services? Who are its competitors? Don't invest in a business you can't explain simply. Lynch provides practical tips on what to investigate. Look at the company's earnings growth. Consistency is often more important than spectacular one-off results. Check the balance sheet to see if the company is financially sound. Understand the company's competitive landscape. Does it have a moat, something that protects it from competitors? This could be a strong brand, a patent, or a dominant market position. Pay attention to the company's plans for expansion and how it manages its inventory. Look for companies that are buying back their own stock, which can be a sign management believes the stock is undervalued. Just as important as knowing what to buy is knowing what to avoid. Lynch warns against investing in the next hot stock or companies in industries you don't understand. Avoid companies with confusing business models or those heavily reliant on a single customer. Be wary of companies with excessive debt or those that are constantly issuing new shares, which can dilute the value of existing shares. Don't fall in love with a stock. Be prepared to sell if the fundamentals deteriorate. Investing is a long-term game. Lynch emphasizes that you don't need to predict the market's short-term movements. Focus on the long-term prospects of the companies you own. Market downturns are inevitable. View them as opportunities to buy great companies at lower prices, not reasons to panic and sell. Patience and discipline are your greatest allies. One Up on Wall Street empowers you. It shows that you don't need to be a financial expert to succeed in the stock market. Your unique perspective and willingness to do a little research give you a powerful advantage. By paying attention to the world around you, understanding the businesses you invest in, and maintaining a long-term perspective, you can achieve significant investment success. This book is a must-read roadmap for any aspiring investor. Remember, if you like the sound of this book and want a free copy, use the link in the description to get it for free with Audible. Subscribe for more summaries.